Hello and welcome. You are tuned into Buy Now, Sell Now with me, Ankur Mishra and Ankita Saxena, a show where we give you clarity and confidence regarding the stocks, how to navigate in the market. All you need to do is pick up your phone and WhatsApp us to 86579 But let's get started with markets first. Ankita, a day of red today.
Absolutely, Ankur. It's a day of weakness yet again. I mean, a bit of a correction that we all were penciling in after that rally. So we are witnessing that right now. In fact, Nifty is below 25,500 levels that it managed to hold on to yesterday. But today it has gone below that as well. 25,484 is where Nifty is perched at right now, trading with cuts of 0.2%. Nifty Bank ditto trading at the lowest point of the day, trading with cuts of 221 points right now. Nifty Bank also reeling under selling pressure. Now, if you look at the sectors, there is a sectoral churn that's going on because Nifty IT today has gained the top spot as the top sectoral gainer with gains of 0.2% coming in. Infosys, Emphasis, Wipro, Coforge are lending support with gains of more than 0.5%. Nifty Auto has also marginally ticked up in the green, and remember, Nifty Auto sales numbers had trickled in yesterday. A mixed bag coming in there, so Nifty Auto today is trading in the green. Nifty Metal is continuing its performance since yesterday. That was another spot that was in the green yesterday, and today also it maintains, it's holding its ground today as well. Nifty Metal also trading with gains of 0.1%. The rest of the pack is trading in the red, especially Nifty Realty that's trading with cuts of more than 0.5%. That's reeling under selling pressure right now. But if you look at the broader indices, the broader markets are also reeling under pressure. Yesterday they snapped their outperformance, underperforming the benchmark indices, and today the underperformance continues as mid-cap and both mid-cap and small-cap are trading with cuts of mid-cap with cuts of 0.2% and small caps are down 0.5%. So that underperformance in the broader market continues, and as far as the market breadth is also concerned, it is tilted in the favor of declines by a huge number. And India VIX also is up almost 0.4% right now. 12.5 is where India VIX is also perched up at. So that's how largely the market is shaping up. A weakness coming in the market since yesterday. So we see that continued weakness, Ankur.
Yes, continued weakness. So the market is down, but not out as far as the broader indices. Of course, they are trading at the lowest point of the day, but there are sectoral indices which is keeping still pace up with the market. Let's welcome our guest, Lancelot D. Kunha, as well as Hemen Kapadia. But in the meantime, what you need to do is pick up your phone, WhatsApp us your stock query on the number 86579 86579 That is the number where you have to send your queries. Remember, you need to mention the stock name, holding period, how much quantity you are holding, and more than that, the buying or selling price where the question you want to ask, and do mention your name as well as place where you are sending your query. But let's get started today with a check on the market. Lancelot, I want to come to you. How do you read markets today? It is trading at the lowest point of the day, but as far as banks are concerned, today they are under pressure, especially PSU banks, which has been outperforming the market for past 3 to 4 days.
I think markets have had a good rally over the last 2 weeks or so, and now obviously there's some amount of consolidation that's going to take place, especially because we are coming into the earnings season, and as companies give their earnings, announce their earnings as well as their outlook for this current year, you may see some amount of re-rating. But on the whole, if you look at the Nifty earnings are not expected to be much higher from what they were in the last year at this point in time. And since the earnings for Nifty companies is muted, valuations after the recent rise have become a little expensive. So that's why you're not seeing much of follow through buying in that sense. And now it is going to be more of a stock specific moves that we will see as companies announce their earnings, and those companies that have done well, you will see sharp up moves, and then companies that haven't done well, you could see some amount of sell off happening in those companies.
So So that's the word coming in on the market. But with that, let's get started with all the questions. We'll start taking your questions now. The first question that's coming in from Rajesh Gupta, who's writing in us from Delhi. He's bought 300 shares of Axis Bank at a buying price of 1,180 rupees, which has nosedived to 1,168 today. He says, what are the future prospects? Lancelot, let me come to you. For IndusInd Banks, financials have been a common consensus, and banks have been, holding the fort. But going ahead, what do you see on the penciled in for Axis Bank?
This bank had come out with good numbers last quarter, although there were certain maybe signals in terms of a little bit of weakening on the credit quality side, and that had resulted in maybe a little bit of concerns. But going forward with RBI having cut rates, twice so far, and we are looking at an outlook on the interest rate side of an easing of monetary pressures. We've also seen a lot of liquidity being provided by RBI as well, and so that augurs well for banks because they would be able to reduce their cost of deposits, and the net interest margins would improve going forward. So I think Axis Bank will benefit from the overall reduction in rates, as well as their book has been growing, and we have seen a slight pickup in credit growth over the last quarter as well. And we expect that pickup in credit growth to continue, which should mean banks should do much better going forward. In terms of valuation, Axis Bank is already fairly valued because it's expected to do well. So maybe if there's a correction in the price, that could be an opportunity to acquire the stock, but keeping a longer term outlook in mind. In the short term, there could be some sharp moves based on the results, but otherwise longer term, I think there would be a good opportunity to buy and hold it for long term.
All right, that's the advice on Axis Bank. But moving on, next query coming in from Madhusudan from Hyderabad. He wants to know about Hindustan Zinc. He has purchased 100 shares at the price of 455. Heyman, I want to come to you for recommendations. What will you advise Madhusudan on this stock?
A very good morning to you, Ankur. Thank you for having me on the show. It's always a pleasure. I'd say hold. Oh, things are going good. The block deal happened. It came down with a gap and it's been floundering after that, done nothing. Having said that, it's been corrective for 13 months. So I don't think there's too much of a downside. Yes, if it closes below 420, that will be the first sign of impending doom. But as of now, it's not showing anything of that sort. It is oversold, so I would say hold. But till it doesn't close above 458 on the daily or 460 on the weekly chart, don't expect anything significant to happen.
Right, moving on from Hindustan Zinc on the charts to the next counter. This is, they have not given their name, but this person writes that they have 100 shares of 600 shares of Reliance from the initial allotment. Should they keep it or dispose it now and buy some other share? Please suggest other shares to buy now after disposing half of Reliance. So bought it at 600 rupees. Clearly they're sitting at a profit. So it wants to know probably if they can book half profit for half the shares and perhaps invest that money in some other counter. Lancelot, what do you feel?
Reliance, then there is going to be some amount of unlocking of value that will come in, as they maybe demerge their the new age businesses, which was in the retail. And so it's better to hold on to it because whenever that unlocking happens, you'll get, additional valuation. So I think Reliance is a hold at this point in time.
So Reliance is a hold. That is the advice which is coming in on that counter. But moving on, we have a query from PVN Rao, Hyderabad, and thank you, Mr. Rao. You keep writing to us regularly. His question is regarding small cap and mid cap ideas. Anything which you can suggest, Lancelot?
So I think, the small cap companies, a lot have gone up consistently over the last couple of years. I mean, last couple of months. But one idea that is a little long term, if one is willing to hold it for maybe a 3 to 5 year perspective, you can look at maybe buying into Go Digit General Insurance, because this is a, the space at which it is growing, as well as because of its digital advantage, they are seeing much higher growth as compared to the traditional general insurance companies. And with the increased penetration, you should see this company, generate higher than market returns or higher than market earnings, and that would drive valuations much higher going forward.
All right, moving on to the next counter then. This is Siddhar, who's writing from Chennai. He's writing about his KPIT Tech. He's bought 50 shares at a buying price of 1500. For the long term, he wants to know if he can add more at the current market price. He may tell us, is it the right time to get into KPIT Tech?
Yes, Ankita, I think we've had a decent correction, and this correction has lasted for almost 9 or 10 months. Yes, so it's oversold on the short-term charts, but since things are a bit iffy on all time frames, maybe he can buy, but not buy everything at one go. Current levels is a good level. Then one can look at 1190 and 1140, a couple of levels where he can spread his purchases. Ankita.
All right, that's advice coming in for KPIT Technologies. Moving on, next query coming in from Pankaj, who's writing from Haryana. He wants to know about Zen Technologies shares. He has bought at 2,132. He is holding 550 shares. What will you advise, Haven?
I think it's a clear hold, nothing to worry. We walked into a correction, which is fair enough. We've had a extremely smart move from sub 1000 to 2250 or so. So it's a correction within an uptrend. He can expect 2300 plus in the next 4 to 6 months. Clear hold.
All right, moving on from Zen Tech to the next counter. This is Praveen, who's writing he's writing in from Japan. Well, wow, we have international viewership as well. He's writing about having Ujjivan Small Finance Bank at a buying price of 34 rupees. He wants to know about, and Geo Financial Services at a buying price of 258. Now, his question is that in the NBFC space, any better alternative for these two stocks, or should he exit? And what should be the exit point for these stocks? For the exit point, Himena, I'll come to you, and maybe perhaps for a better bet at the NBFC space, Lancelot will come to you for that. And the duration is for 5 years.
Okay, Ankita, as far as Ujjivan is concerned, there's not too much of data, but it's a very clear hold. The long-term charts have improved, so possible levels to exit is probably 57 and 63. From a longer-term point of view, NBFC, I think, though they've become ex-bonuses and all, I think safe bet would be Bajaj Finance or Bajaj Finserv.
All right, moving on. Next query coming in for Concor. The viewer Ravindra Chandra from Hyderabad is writing that he has Concor shares at the price of 650, and also one more stock in his portfolio is Crompton Greaves. He's holding 100 shares at the price of 355. Again, the question is for short term, so I'll come to you, Hemen, for answering that query.
Container Corporation, firstly, the stop loss needs to be set at 725. We need a close above 760 for a further upside to come in. Short-term view, the bigger picture is slowly turning positive after the stock virtually became half. So I would say keep these levels in mind and hold. I believe a recovery is on the way, Ankit.
Right. So that's the word coming in on Concor on the charts. But moving on to the next question. This question is coming in from Tirunuveli. He writes from Shivakumar Krishnan. He says that he has 20 shares of United Spirits. He's bought it at a buying price of 1500. He wants to know the future prospects. There is no question. Yes, I'm assuming he wants to know the future prospects for United Spirits going ahead. Lancelot, please take this question.
On a long-term basis, definitely United Spirits is a hold, because they are one of the dominant companies in the space of Indian-made foreign liquor, and they would continue to. That business is continuing to grow, as it expands across, because it's more of a lifestyle business, and you will see continued growth, and being a dominant player, they would enjoy much higher margins than the new players who are coming in. So I think one should look at it since he has an outlook of 3 to 5 years, one should look at it as a hold at this point in time.
Hold is the advice coming in for United Spirits. With this, it's time to take a very short breather, but don't go away. Keep writing to us the numbers flashing on your screen 865797457 and we'll try to answer all your stock queries after the break. Me, Ankur Mishra and Ankita Saxena, all you need to do is pick up your phone and WhatsApp your query to 865797457. In the meanwhile, let's also pay attention to what is happening in the market. Goldman Sachs has actually initiated a downgrade call for both IndusInd Bank as well as SBI Card. Let's go across to Snehi and get us more details on this story.
Well, yes. So two stocks that are trading in some pressure today, under some pressure, is IndusInd Bank and SBI Cards. Is on the back of a Goldman Sachs negative note coming in for both of these stocks. So first up, let's understand Goldman Sachs' view on IndusInd Bank, because they have downgraded the stock to a sell rating from neutral, but have hiked the target price to 722 from 634 rupees per share earlier. They say that the bank is likely to have a weaker growth profile going ahead. And on the back of this, they've also cut their EPS, which is earnings per share outlook, by 25% and 17% for FY26 and FY27 respectively. The cut is driven by loss of market share in key loan portfolios as well as deposits. They also say that revenue engines are slowing down and operational controls look challenging for the bank. They say that the bank has now become a structurally weak franchise, and ROA's, return on asset, is also set to be lower going ahead, and persistent margin pressures likely on weaker yield trajectory, which is elevating funding costs. So a whole slew of negatives that Goldman Sachs has pointed out for IndusInd Bank, which is why the stock is under pressure. Another stock under pressure is SBI Cards, and on the back of that, Goldman Sachs has downgraded the stock to neutral rating from buy. Target price has been maintained at 1006 rupees per share. They've also cut the EPS for this one by 9.5% and 7.8% for FY26 and FY27 respectively. They see positives already reflected in the price, but they're saying that they see sharp re-rating balances. It balances the risk reward going ahead. Credit costs and growth are going to be key focus areas in the near term. They believe growth will start accelerating in the second half of FY26 on improving ROAs, and loan growth may also see an uptick. EPS growth may be gradual due to slow loan conversion, muted leverage gains, as well as higher credit costs. Increased credit cost assumptions. This is something that they have done, wherein they've increased the credit cost assumption for SBI Card by 50 bips each in FY26 and FY27 to 7.5% and 6.5%. So negative notes coming in from Goldman on both IndusInd Bank and SBI Cards. Both of these stocks under pressure as we speak.
Thank you so much for joining us with the notes. Note by Goldman Sachs on IndusInd Bank and SBI Card. Both stocks have been downgraded by Goldman Sachs, and we can see the impact coming in the stock price today. But let's get going with all the stock questions that you have been sending us. Keep sending in your queries on the number that's flashing on top of the screen, and we'll get them answered by our experts. Let's get started yet again then. We have a question from Thomas George, who's writing in from Cochin. He says that he has 100 shares of Gabriel India. He's bought it at a buying price of 350 rupees. What should he be doing with these shares? Lancelot, take us through Gabriel India. Now, this counter has been locked in the upper circuit. 20% upper circuit is where Gabriel India is locked at. He's purchased it at a buying price of 350, so he's sitting at a good profit. What should he do now?
Wait, till the valuations, go up further, because at some point in time when the circuit opens up, you may get an opportunity to probably sell some stock and book some profit, because he has been holding it for a long period of time. So there's always a good option to try and do some amount of profit booking and when the circuit opens, you might get a chance to do that.
All right, moving on. Next query coming in from Amchi, Mumbai. Mahendra from Mumbai is asking about CDSL and Naveen Fluoro. How good they look to medium to long term? If you can advise, Lancelot.
Will do very well, because if you look at the number of demat accounts and the transactions that take place, its entire revenue is generated from new demat accounts as well as opening transactions. So given that there is going to be a long-term growth in both transactions and number of people entering the capital market, I think CDSL is well poised to take advantage of that growth, and you will see its business growing. However, when you look at the valuations, it's trading at significantly high multiples, and these multiples actually factor into earnings growth. Maybe they have factored in today earnings growth for the next 3 to 4 years. So there is a heightened risk in acquiring a stock at such a high multiple, because whenever there is a market correction in terms of earnings drop, or maybe there's a negative quarter or two, that could mean the stock could get re-rated downwards significantly. So there is a big potential for a decline at that stage. So one should be careful in terms of entering at a high multiple stock at high price. Maybe it's best to wait for a correction and then pick up stock at that point.
Better to wait for a correction and then pick up stock at that value. But the next question is coming in from Mahindra from Mumbai. He wants to know if he wishes to buy Triveni Turbine or Navin Fluoro, and also CDSL. CDSL, the view, Lancelot just gave us a view on CDSL. For the medium to short term, please advise if this is a good choice. He means to invest 2 lakh rupees. Let me come to you, Himen. Triveni Turbine or Navin Fluoro, and CDSL, of course, already Lancelot spoke about it.
Ankita, this earlier stock that you mentioned, Triveni Turbine, is in a medium-term bounce. We've had a decent correction. It's been a multi-bagger move from 50 to 900. So as of now, a close above 640 could trigger off an upside. So Triveni Turbine quantifies as a buy the way I see it on technical parameters. Stop loss needs to be kept at 560. As far as Navin Fluorine is concerned, we're at all-time highs. We've just posted a fresh all-time high, I believe. The run-up has been on from 3,200 to 5,000. So without correction to sub 4,700, I'm not sure the risk-reward ratio is in favor of buying fresh now. So comparatively, Triveni Turbine is a better bet than Navin Fluorine from a shorter to medium-term point of view.
All right, that's advice coming in on Navin Fluorine. But moving on, we have a next query from Gurgaon. Puneet is asking that which are the FMCG stocks which is fairly valued at this moment. Lancelot, would you attempt to answer this? And I like the question, and thank you for sending this question, Puneet. He has earmarked rupees 1 lakh for this investment and wants to know which is the FMCG stock he can pick.
I think, when you look at FMCG stocks, one has to look at the valuation as well as a stronger growth outlook. So I think that you will see a better growth outlook coming in from companies like, Nestle India. So that can be looked at accumulating even at this valuation. And the other could be Marico Industries, which is also doing, has shown good growth, and valuations are also reasonable. So one can look at these stocks for accumulating.
All right. So that's the word coming in on Marico. But let's move on to the next counter. The next one is, they have not given their name, but it says that they have 50 shares of DLF at a buying price of 804 rupees. They want to know if they can hold it for the next 2 years, and can he add more, and at what levels should he be adding this? Himen, you would want to take this question. What are the levels to watch out for DLF?
Okay, levels to watch in terms of adding. The first level would be around 815, Ankita. Second level is 783. Coming back to your other part, yes, it's a hold for 2 years. Expect a price target of 1100. Looks good. It's a buy on decline. Thing is, it's had a run up, Ankita, from 620 to 890 or so. That is why we are having this period of time price consolidation, time price retracement, buy on declines.
All right, moving on, next query coming in from Thomas George from Kochi. He is a regular viewer of ET Now. Thank you for watching ET Now. His question is regarding Varun Beverages, which is bought at 510. What will you advise, Heman, to Thomas?
Has got spoiled, Ankur. So not looking very good from a slightly longer term point of view. Having said that, one needs to look at the quantum of the earlier move. Sub 50 to 700 or so. Extreme short term, we are oversold. But being oversold does not mean we are going to see a recovery. We need a close above 465 for a couple of trading sessions. As of now, things are not looking good. But if we close below 445, the pain could continue. Like I said, the longer term picture has taken a hit. It's entered a correction of a greater degree.
All right, let's move on then to the next counter that is in we are talking about. That's Tex Maco Rail. This is for Lancelot. This is by Manoj from Doha. He says he has 1,750 shares of Tex Maco Rail purchased at 138 rupees. What's the prospect for another 1 year?
So I think the prospects for the business is very good because the government is expanding the the budget, the outlay for rail, and that is seeing increased orders for Texmaco Rail. So I think from a business perspective, yes, they will see increased revenues and increased profitability. But if you look at it from a like a valuation perspective, it's fairly reasonably priced already, and maybe one can wait for a decline, maybe another 10% decline, and then look to accumulate the stock, because at this point in time it's fairly valued, and it factors into their the order book of 7,000 crores is already factored into the price, and the future earnings growth is already factored in the price. So to that extent, I think it looks a little bit reasonably valued, and one should wait for maybe a 8-10% correction to add to the stock. But long-term outlook is positive.
So long-term outlook is positive for Texmaco Rail. That's the advice which is coming in. With this, it's time to take a quick breather, but don't go away. The stock expert advice will come after the break.
He wants to know two good NBFC stocks and the good entry points for these counters.
Okay, two NBFC stocks. Firstly, I'll go with the easier part. I think, like I said, something like Bajaj Finance and Bajaj Finserv, I think they remain extremely interesting. I think that is where one can buy. They've had a run up, so please spread your purchases. Do not go the whole hog. Bajaj Finserv, one can buy at around 2000, 1970, 1930. And as far as Bajaj, that was Bajaj Finserv. As far as Bajaj Finance is concerned, you need to buy at 890, 855. Both look good from a longer term point of view. They're walking into a correction. That's why spread your purchases.
All right, that's the advice which is coming in from Hemen. But moving on, next query coming in from Balan. Thank you for writing to us, Balan. I want to come to you, Lancelot, for this because he has earmarked rupees 10 lakhs. And I'm telling you the stocks which he wants to buy: Infosys, Apollo Hospital, Bandhan Bank, and Hindalco. What is your advice? Should he keep all four or one or two out of four?
Infosys and Apollo Hospital. I think Bandhan Bank and which was the fourth stock? Hindalco. So I think he can, avoid Bandhan Bank and Hindalco, because if he has to look at a banking stock, then I think, it's better to do a banking or a finance stock. It's better to look at Bajaj Finance because that's growing very well, and, they will see significant margin improvement going forward. So definitely can look at Bajaj Finance instead of Bandhan Bank. And Hindalco is one of the major players in the metal space. Now, metal space the business of metals is very much cyclical, and at this point in time, we are at the peak prices as far as commodities are concerned for aluminium, copper, etc. So you could see some amount of correction. It's always better to buy these commodity companies when we are at the bottom of the or closer to the bottom of the commodity cycle, because that becomes a good entry point, and thereafter when the cycle improves, the stocks get re-rated. So you can look at maybe avoiding Hindalco at this point in time, and maybe substitute, instead of Bandhan Bank, you can go for Bajaj Finance.
Right, Bajaj Finance instead of Bandhan Bank. But moving on to the next counter, and that is BSE. Now, this is Gurinder, who's writing from Delhi. He has 2,500 shares of BSE, and he's bought it at an average price of 654 rupees. So he's sitting at considerable profit here. He wants to know if he should hold or book some profit at this current juncture. Remain. Should he be? Is there more upside? Should he be holding on to it, or should he start booking profits now?
Firstly, heartiest congratulations on a superb investment. We remain safely ensconced in a longer term uptrend as far as BSE is concerned. Little bit of profit booking never hurt anybody. So maybe he can book a bit. But I believe the move is not yet over, and we remain set to go to somewhere around 3,200 in the next 6 months. So he can hold, but like I said, taking some money back home isn't a bad idea.
All right, next query coming in from Satya Veni. He is writing from Vishakhapatnam. Thank you for writing to us. He wants to know about CAMS and Coforge. Is it a good entry level? Hemin, what will you advise?
Yes, once again, it's moved from 3050 to 4350 in a matter of a few months. So wishful thinking, but ideally it should be a buy on decline, which it is. So 4125, 4020 and 3900. Three levels to buy on dips. As far as Coforge is concerned, it's had a brilliant move. It's moved one way from 1200 to 1950 in a matter of 3 months. So I would say wait for a significant decline before things happen. And okay, he's asked specifically Coforge. I would be slightly more comfortable buying HCL Technologies on a lower level comparatively.
All right, coming to you then, Lancelot. This is B. Soumya who's writing in from Chennai. She wants to know about RITES. She's bought it at a price of 295 rupees. She wants to know the medium-term holding period. Should she be holding it or should she exit RITES at this current juncture? She is bought it at 295 rupees.
So I think it's probably very close to her purchase price, and like I said, when railway stocks are doing well because of the orders being provided by railways so this sector is going to see growth, but this valuations are much more expensive because it's trading at almost 40 times earnings. So it probably is factoring in at least 2 to 3 years growth upfront. And in case there is any kind of slowdown in execution or there's any change in the pace at which orders are being provided by railways, then you could see re-rating of the stock, which could mean there's a significant fall from here, and that could mean the risk-reward ratio is not really favorable for holding at this point in time. So it's better to, since the price is at, she's bought it very close to the current price, it's better to look at exiting and maybe waiting for a lower price of to accumulate the stock.
All right, moving on to the next counter, which is SBI card, and we have just seen that there is a brokerage report which is coming in for downgrading the stock from neutral to sell, and that has been from Goldman Sachs. But Akshay is asking, what should be the stance on this stock now? Hemen, would you attempt to answer this question? He suggested hold in SBI card a month ago. That is what he is writing about this stock.
The stock has appreciated by 50% in the last since last December or so, Ankur. So 880, 840. Okay, Goldman Sachs could have the report, but we've had a fantastic run up. So we're seeing a time price retracement. I'd say hold. The bigger picture still hasn't turned bad, but like I said, 50% appreciation in just a few months, would expect some sort of a breather coming in. That's what's happening. Like I said, level 880, 840 strong support levels. I don't think there should be too much of downside beyond that as of now. Maybe one can review the situation later. I see it as a retracement after a move.
All right, moving on to the next counter. This is Swapan who's writing in. He says he holds SBI and Tata Motors from 2020. Is it the right time to sell? Lancelot, for Tata Motors, there hasn't been a very positive commentary that's been coming out as far as Tata Motors is concerned. Not a very good outlook there. SBI, what would be your view? He's been holding it from 2020. What would you recommend for Tata Motors and SBI?
So, Ankita, I think Tata Motors, one can look at, maybe exiting if your, entry price is much lower. And because, going forward, you are going to see challenges play out in the electric vehicle space, which is where, Tata Motors was one of the major entrants and they had a major market share in that place. And probably because of the boom expected in the electric vehicles, the stock had got re-rated to very high levels and now has seen a significant correction from those levels. So I think one can look at, moving out. The other issue is Tata Motors, most of its business comes from JLR, which is global business, and that could get impacted by the tariffs in the US, as well as it could get impacted by its market in China, because that could see some kind of slowdown. And so, Tata Motors domestic business is a small piece of its consolidated income, and with the global, problems that they are facing, and it's probably a good time to exit. As far as State Bank of India is concerned, I think one should continue to hold State Bank, even though he has bought it at much lower price many years ago. I think the growth in State Bank is going to be significant because as the technology adoption gathers pace, we are seeing State Bank of India leverage on this technology, and using its branch network has been able to reach out to more and more customers and do business with at much better margins. With interest rates also coming off, SBI will be benefited in terms of better net interest margins. Credit growth is picking up. So you will see SBI results, over the next 2 to 3 years doing far better, and that means the stock should see some significant upside from even these levels.
All right, that's the advice which is coming in from SBI and Tata Motors. But moving on, next query coming in from Manohar Kher from Mumbai. He has asked for a helping hand because he's in loss by buying Delta Corp 600 shares at an average of 152. What will you advise him? Should he hold on or average or sell?
As of now, I think it's a sell because it's so deeply oversold and he's going to lose a lot of money. A close above 97 is important from a weekly point of view for a recovery to come in. I believe that could be around the corner considering the fact that it's been down for multiple years now. So the worst is almost over, a medium-term base in place, 97 important. So not a very convincing, yes, but keeping everything in mind, hold as of now. Keep a stop loss of 83, close above 97 should be the first technical green shoot in the last 3 years.
Right, with that, we completely timed out in this edition of Buy Now Sell Now. Himane and Lancelot, thank you so much for joining us and answering all the questions. You keep sending in queries, we'll take them tomorrow. But with that, it's time to wind down on this edition. Ankur and I will take care leave. Thank you so much for tuning in. Don't go anywhere because market action continues on YouTube now.
Presented by Canara Bank.